All right, everybody, it is Monday, August 17th. What's up? I sent out the new edition of MMT Trader, the new issue. So go to my website, pitbulleconomics.com, sign up for a 30-day free trial. NASDAQ, new record high. S&P closed higher. It's creeping towards its all-time record high. It is going to surpass that. The Dow pulled back a little bit today. Tesla on fire, man. Made a new all-time high, 1,840 or 1,850, something around there. Incredible. So let's break it down. Fiscal flows are still very, very strong, so the stock market's going to continue to go up. We need to see some moderation in those flows. That has not happened yet. Unemployment benefits clearly have slowed down, but it hasn't been enough to bring down or cause any deceleration in the overall spending. But now, average daily unemployment benefits last week were 52% below where they were right at the end when everybody was receiving those $600 unemployment checks. So since the end of those checks, average daily unemployment benefits being paid out has dropped by 52%. That's a big number. But again, it has not been enough to offset overall spending. Where's that spending coming from? From the big items, Social Security, all the meds, Medicare, Medicaid, because that's all tied in with coronavirus. All right? So you got that going on. Looking at tax flows, employment and withholding tax deposits, I mean, they're down. The year-over-year negative gap now is negative 33 billion. So 33 billion less in those tax flows compared to the same time last year. And again, that has been a pretty good indicator for weekly unemployment claims. So we might see those start to pop back up again. I mean, they came down in the last 2 weeks. We may see those start to pop back up again. We'll check it out this Thursday when we get that data. The banking data for the week ending August 5th. A renewed contraction in loans and leases led by commercial and industrial loans and also credit card loans. Now, there's a theory behind these, why these credit card and revolving credit loans are going down. You know, people are paying down their debt, and that's because a lot of people are, they're flush with cash from the government stimulus checks and the money that the government's been sending out. But that has slowed down. I just mentioned the disappearance of that $600 a week supplemental unemployment benefit. That's gone. So we may start to see credit card and revolving credit loans start to pick back up as people tap credit again as opposed to paying with cash. I have to keep an eye on that. What else? Auto loans were down for, I think it was the first time in a number of weeks, I forget how many weeks, but it was the biggest drop in 3 months. And auto loans in the past, I mean, that has been a pretty good barometer of overall economic activity. I mean, whenever those things are rising, you generally have an expansion in the economy. And when those things start to falter, I mean, it's kind of a good leading indicator. So you got to keep an eye on that. But automobile loans did suffer the largest weekly decline in 3 months in the latest data. What else? Oh, looking at the CFTC's commitment of trader report, S&P E-mini futures, very interesting. Institutional asset managers now are net long 670,000 contracts. That is their biggest long position since February 24th, since the week ending February 24th. And that might ring a bell, because the week ending February 24th was right around the market top, if not the market top this year. Now, but back then, actually in January, institutional asset managers were net long over 1 million S&P E-mini futures contracts. So now what, they're about 2/3 of the way there. They could still add to that. They've been coming to this rally grudgingly now over the past few weeks. I mean, they did nothing since the low in March, and you know, when we rebounded like 40-50%, they were reducing their long position, and now they're slowly starting to come back. So they're kind of late to the party, but they still have plenty of buying power. I mean, if you think about it, in January they were net long 1.1 million contracts. Now they're net long 670,000 contracts. What else? Oh, gold and silver. Commercials, those are the producers in those markets. They were covering shorts last week when we had that big correction. So they used that as an opportunity to cover shorts. That's bullish. And now we're seeing gold and silver run back up again. I mentioned last week, Friday, I believe, that Warren Buffett, he bought Barrick Gold, 21 million shares of Barrick Gold. And by the way, he sold the banks, which I think is a mistake. Bank residual, which is assets minus liabilities, it's literally bank wealth, net worth, is now at the highest level in almost 4 months. It's been coming back up. So he sold the banks, he bought gold. I think he got the gold right. I think he got the banks wrong. We'll see. I think banks represent a great value. If you're a stock investor, the big banks represent a great value. What else is going on? Oil in this tight range. Producers, they've been short oil for 14 weeks straight, but they've been reducing that short position, but they're still net short. All right? Large speculators, they are heavily long oil, and so are the small speculators. What else is going on? Trying to remember. Anyway, it's all in my report today. If you want to get it, go to pitbulleconomics.com, sign up for a 30-day free trial. Fiscal flows are the top, the basic thing. I mean, the core thing here is that fiscal flows are still very strong. We have seen no deceleration in those flows, no moderation in those flows whatsoever. So the market's going to keep going up. The S&P is going to make new all-time highs, and probably the Dow is going to make new all-time highs too. So we're just waiting on that. And by the time this thing ends, you'll probably once again have those institutional asset managers long over 1 million futures contracts. And we'll finally get to see the weekly AAII survey show individual investors having a bullish outlook on the market. Remember, they've been bearish the whole entire time. Bearish the whole entire time. We'll finally get, you know, at the end of this thing, I'm pretty sure we're going to get to see those individual investors flip to the long side. But there's a lot more stuff in my report. Go to my website, pitbulleconomics.com. Sign up for a 30-day free trial of MMT Trader. See you tomorrow. Bye.